Good morning, you lovely people. It is Thursday, the 29th of January, all day. Blinking, you miss it. January's nearly gone. You join myself, Ryan, and of course, Michael for the Morning Blast. Your very much no holds bars, very much kind of not politically correct market podcast. We look back and see what's happened the previous day, look forward to seeing what's coming up on our dockets, and also normally a few rants and expletives and just calling people out for being mags. Michael, how are you?
Well, a very good morning to you, Ryan. Good morning, everyone. I'm very well, thank you, mate. Very well indeed. Although I will warn you, it might be a slightly interrupted morning blast on my side this morning because a man delivering a very important parcel is apparently moments away. So I may have to go and let him in a second.
I was wondering where this was going then when you said a man is. We won't ask what we won't ask what the parcel is. You know, it may be vibrating, it may not. You know,
Well, I hope not.
rubber forearms are available on Amazon.
Oh.
Speaking of rubber forearms, let's crack on.
Clive Lambert.
Clive Lambert market update. It's a very big day for Clive. In fact, there's a lot going on for Clive's day today because she's
Be a momentous day for Mr. Lambert, couldn't it?
Because he is meeting me for a pint. Right.
He's also just lost about 3 kilograms from sweating so much, as we said.
Private joke, but need to say Clive Lambert's ass was puckering when I was going on about that. But anyway.
You know how we say this is, catering to all levels of brow?
That was the lowest.
Yeah, we're never going to get lower than that, are we?
Well, give me time. Right, where are we? Clive Lambert from Futures Text is market levels and what's been happening. S&P pulled back from yesterday's overnight high at 7,043, but only to 69.77. A result. Oh, someone's at the door. There's somebody at the door. Right, result of that yesterday in the S&P was a doji candle. The DAX, obviously over here not here, but over this side of the pond, Germany, futures seeing weakness as Clive was writing. So might be a good to retest the 24,618 and 24,455 level. Eurostoxx 50 didn't hold on to yesterday's early gains and ended up posting a powerful bearish engulfing pattern with Marabouzi resistance at 5,975. Answers on a postcard, please. FTSE futures also posted a reversal candle, but is bid this morning, so everyone seems to be ignoring that. Bund futures, the German government bonds, continue to chop around shy of 128.34, lacking any clear direction. Dollar bears took a day off yesterday, but cable is bid again this morning, so must be loving Sir Keir's Chinese whispers. I see what Clive's done there. Keir Starmer's in China, for anyone that didn't know. Bitcoin. Don't do that. Bitcoin found sellers at 90,000. It is on the back foot again this morning. And I've seen a few people have commented that, the best thing for Bitcoin is if Trump and Michael Saylor could just stop associating themselves with Bitcoin, and it might start taking off again. Gold, we'll come on to that in a second, but moving on to, and silver, in fact. LME copper, seen a big move overnight. Yay! Through resistance at 13,407, up to 14,119 at the time of writing. LME aluminium has been up to 3,341 in the Asian session, highest print in that one since April 2022. Brent and WTI bid again this morning. Next upside targets for Brent are 69.84 and 73.33. TTF, Dutch gas, that held support at 35.17.5 yesterday, and it's bid early on today. We're now looking at the March contract in that one. Same with nat gas in the US, really. EU carbon market saw red yesterday. 78.09 is the Marabouzi resistance, and we're now short-term bear below there. Ags, agricultural commodities and US based, all caught a bid yesterday. Wheat putting some distance on the 525 level, testing Fibonacci resistance at 539 as Clive was writing. Soybeans, they can give 1,089 a test, with 1,059 still holding firm. 1,121 and 1,172 are targets higher up if you're long soybeans. And he's just texted me a correction and said, in carbon, actually, don't worry. Okay, he's having a flat because he's like I said, he's having a good day, and I think
he's all nervous about who he's seeing later.
Yeah, it's me, obviously, only me. He's only seeing me. But anyway, gold and silver. So let's quickly topic on that. Gold posted another green candle, 7 in a row now. RSI for the daily is hitting 90, and this is kind of like unprecedented levels now. Starting to look frothy, to say the least. Silver made another all-time high overnight, printing 120 spot 56 and a half, where we found some opposite trade, but only some. One thing I wanted to note on this, and we got kind of a few people, I'm talking to you, Nick Letts, laughed at us for saying it's been orderly. And what we mean by
Sorry, I love how someone who's 5'4" is now taking on a UFC MMA
I'm
champion.
not taking him on. And also, I'm part of the Carney Massive. I've got Carney merchandise. I love him.
Whoa! Where's mine?
Well, really, you're a commie. You don't get any.
I'm going to bring him out into the car park now.
But we did mention about it being orderly, and as we said, that's nothing to do with the price or where it is. Like technically, it just means that in terms of market dynamics, it was trading every tick, etc., etc. However, what a difference 24 hours.
No, it's not.
Because it started to fall apart. If you look at market profile, there's a lot of gaps. There's a lot of single letters being printed. There's a lot of vacuums to be filled. It's the first time, in my opinion, that we've really got some kind of, it's getting a bit like things are creaking. So do be aware. Obviously, it's a GTC comment these days. Do be very, very careful if you are involved in the precious metal space. Good on you if you're making money, but please, making sure you're booking some profits. But Michael,
actually, I was just going to say, just very quickly on that, because I was trying to get a bit of colour from some of our guys in some of our guys who were trading during the APAC session today. And the first thing that they flagged three things. The first was that volumes, if you look at futures, have gone kind of berserk. When I got to the desk this morning, the front gold contract had already traded about 80% of what it did on Monday and Tuesday, and this was like 8 hours into the session, which is kind of ridiculous. Spreads have also been absolutely all over the place overnight, as you might expect, given the relatively thin liquidity that you just alluded to. And the third thing is that there is a bit of speculation, chatter, kind of market rumor, as these things often do the rounds, that actually a lot of what we might be seeing, because one of the questions that everyone's been asking is who the hell is buying gold at $5,600 an ounce? Well, a lot of kind of evidence is now actually pointing to this coming primarily from hedging activity, mainly as a result of those who have sold options. You know, if you were selling options at 54, 55, 56 strikes, even earlier in this week on Monday or Tuesday, they would have been massively out the money.
Yeah.
But of course, as spot has moved and as the market has rallied, you then have to hedge those positions, essentially resulting in what we would technically call a gamma squeeze, which is potentially one of the things that we are starting to see. And I think that would, again, sort of help to explain, no one acting logically is going to sit here and go, do you know what? Silver is up by 80% on the year and gold's up by 20. I think now's a great time to buy.
Yeah.
I think it's more mechanical in nature.
And do you know what
we're seeing?
When we in the past, when we've seen kind of markets go parabolic and real, fucking fun and games kick off, it's when the gamma squeezes and the gamma hedging, etc., whatever you want to call it, it's when that kicks in, and that historically comes to the end of the market move when things get really fucking silly. I'm not saying it's going to carry. It might carry on for another $100 in silver. I don't know, but it might go up another 25%. Might go up. I don't know, but just historically, when the market is being led by option hedgers, gamma hedging and whatnot, that's when market fundamentals are really starting to break down. And just
it sort of starts to suggest that, quote unquote, normal, regular, run-of-the-mill participants aren't involved anymore.
Yes. Yeah. Right.
It's not people buying as a result of some sort of discretionary strategy. It's not people selling to take profit. It's, as you say, people who are forced to trade because they've got to manage the risk on the contracts that they've got.
And just before we go on, because we're going to talk about earnings and whatnot, but I think it's quite educational, this bit, for a change. Just to look, I'm no expert in gamma hedging and stuff, even though for some reason I was a Bund market maker on Eurex. Don't know how I landed in that Bund option market making. I have no idea how I did that. I don't know how I made money, because quite honestly, I don't know the first thing about options, but there you go. Or Bunds. To quote a good friend of mine, Jamie Charlton from the live floor, he was once interviewed and they were asking him what the numbers were up on the screen on the live floor, and he pointed up at the numbers. I swear to God, he went, "See that number up there? That's something to do with German bonds. No fucking idea what it does, but it goes up and down, and that's all I need to trade it." There you go. Jamie Charlton, everyone. But no, anyway, just a real TLDR on what gamma hedging is for those that have like, what the fuck are they on about? The TLDR, and there's much smarter people in the room than me on this, is basically option traders or people with options on are basically forced to buy near the top or wherever to ensure that they're delta in basically to ensure they're net flat. So by buying, they actually de-risk, and that's when things get really messy. That's roughly, yeah, people are going to slate me for that explanation, but for the tourists out there, that's close enough.
Yeah, this also isn't an options podcast, and we do only have 20 minutes, so you cut us a bit of slack on that one.
I can barely spell options. Right. Today's so what else is going on?
Yeah, I was going to say just a few things from yesterday, first of all, because obviously we did have an FOMC decision as expected, really. It was a bit of a non-event. The committee maintaining the target range for the Fed funds rate between 3.5% and 3.75%. That said, there were two dovish dissents, Governors Myron and Waller dissenting in favour, of delivering a 25 basis point rate cut. The former was very much expected. The latter was not. And a lot of people are viewing that through the lens of perhaps Waller trying to keep his hopes of getting the Fed chair job alive, although he has been relatively dovish for quite a lot of this cycle. So perhaps it's not too surprising in the grand scheme of things. Beyond that, the statement was pretty much unchanged from that was issued last time out. The committee repeating that they are considering additional adjustments to the Fed funds rate, which implies an easing bias going forwards. A lot of people picked up on the fact that the committee changed their language around the unemployment rate. Previously, they were talking about how that had been picking up, whereas this time they mentioned that there have been some signs of stabilization. To that, I would say two things. One is that, of course, there's been signs of stabilization. Just look at the bloody data yourself. The second is if they are cutting, or last year they were cutting because they believed downside employment risks were increasing. If you then go on hold, you kind of have to say that those risks have at least stabilized, because otherwise logic would say you need to cut again. So I think people are reading way too much into that. The press conference after the decision was a bit of a non-event as well. Jay Powell making absolutely no comment on his future after May, or on the DOJ subpoenas, or on anything related to recent foreign exchange developments. In fact, the broad sort of theme and takeaway from what we heard from the Fed last night was really that they are just in wait-and-see mode at this moment in time. The Fed funds rate is within what's a very, very wide range of where they think the neutral rate might be. Powell thinks that policy is well positioned, reiterating that they're going to take decisions on a meeting-by-meeting approach, and really not telling us anything especially new. I think it's very much still a case of if the labour market were to weaken, then they are more than happy and willing to cut again in the short term. If not, it's going to be a matter for Powell's successor after the June meeting to try and bring the committee along with them on what's likely to be a much more dovish approach to managing the US economy. Just a couple of other bits and bobs before we get on to the earnings that we want to talk about. Actually, probably the most interesting remarks we had yesterday were not from Fed Chair Powell, but from Treasury Secretary Scott Bessent. He was talking about the dollar and did a bit of a U-turn on what Trump was saying. Of course, Trump on Tuesday seemingly expressing a degree of comfort with the recent weakness that we've seen in the greenback. Bessent giving an interview to CNBC, noting that the US always has a strong dollar policy, while also flagging that the shrinking trade deficit should help the dollar. He was also refuting rumors that the US have been helping to intervene in dollar yen. And then in an interview that he gave later on to Yahoo Finance, he noted that Trump's pick for Fed chair might come, in his words, in a week or so. Earlier in the day, he had said that the list was still those four names: Waller, Warsh, Reeder, and Hassett, although Trump does seem to be ruling Hassett out of that. It is still very, very unknown who it will be, or indeed when we will get that announcement. Speaking of Trump, he was talking on Iran yesterday, just upping the ante in terms of threats, saying that there's a massive armada ready, willing, and able to fulfill its mission if necessary, saying that he hopes Iran will come to the table and make a deal, but the time to make a deal is running out. The Iranian mission to the UN said that they stand ready for dialogue, but if pushed, they will defend themselves. As I said to Batesy this morning, it's getting the vibe that it's another weekend where you really don't want to be short crude, just given everything that is going on. And actually, WTI trading north of $64 a barrel this morning. Last, last but by no means least, in what feels like an evergreen headline, Deutsche Bank yesterday confirming that public prosecutors were on site in their offices in Frankfurt and Berlin investigating suspected money laundering allegations.
You know
How
what?
some things never
I
change.
gotta say, when I saw the headline, Deutsche Bank offices raided by police, I honestly had the biggest deja vu. Fucking
It's
hell.
ridiculous, isn't
I
it?
was like, oh my God. I felt like I was sitting back in the kite office. Oh God, it took me back. But yeah.
I mean, they are, the basket case of European banking, aren't they? Well and truly.
Well and truly, absolutely.
Well, especially now Credit Suisse don't exist.
Well, quite. I'm still waiting for a Credit Suisse headline now, though, to be fair. Right.
Give it time.
Right. Today's topic du jour, earnings. So obviously we've got the mega cap earnings. Obviously, it's predominantly led by like AI, capex, arms races, kind of the thing that's in vogue, etc. Before Michael takes the lead, just to give a kind of brief summary. So we've had Microsoft beat on everything. Stocks tanked last night, as you do. I'd say I've said this before, but you could give me the earnings ahead of time, and I wouldn't have a fucking clue how to make money on earnings. It just seems to be like Russian roulette.
Yeah.
Or spin the wheel. Meta revenue accelerated, and market loved it. Tesla first annual decline on the autos, pivots complete potentially, and there's like they're putting everything now into robo taxis and all this bollocks. Apple, which is tonight's main event. Again, Michael will take it from here in a second. But yeah, overall, it's basically everyone's looking at what people are executing on the AI front. I think particularly the thing that potentially might be impacting Microsoft is that concentration risk with OpenAI. Bring out the circle jerk memes, etc.
Oh, I'll get my elephant.
Get your elephant out. Whee, whee. Sorry. But yeah, Michael, take it away. What's been going on?
Yeah, so I think there's a few kind of broad takeaways that we can sort of glean from the earnings prints that we got yesterday. And I think what's really interesting is we'll do Tesla in a second. We'll leave those for a moment. But that divergence that we saw between Microsoft, which were down as much as 8% after hours yesterday, and Meta, which traded as much as 11% to the upside in the aftermath of their report yesterday. And I think the reason why we saw Microsoft struggling is, as you said, firstly, you do have that concentration risk around OpenAI. But secondly, I think it's the fact that actually their Azure revenue, which is basically a proxy for cloud and AI and all that nonsense, that rose by 38% year on year, which is quite frankly staggering. However, that was only in line with market expectations, and it was also down by a percentage point compared to the prior quarter, while at the same time, Microsoft raised their capex guidance by 66% compared to this time last year to $37.5 billion, and that was well above market expectations. So the nub of that is that, one, the stock is priced for perfection and needs beats to continue rallying. The second is that based on the figures that they released, they are making less on certain revenue lines than the prior quarter, but at the same time planning to spend more than they were previously indicating, which clearly the market has taken a bit of a dim view of.
This exactly that. I think this is the thing. This capex number is huge, and it's like you got to look at it. Is it value creation or value destruction at this point? Because it feels like all the eggs in one basket kind of thing. But I do feel, I don't think we should be looking too much at Azure. Just it's a rounding error. Let's be honest.
Oh, absolutely. Yeah. I mean, this is just the way the market was viewing things yesterday. And then actually Meta was almost the complete opposite.
Yeah.
Where you actually had a beat on revenue. You had an upgrade to Q1 revenue guidance, which means that, they raised their capex guidance as well to as much as $135 billion in the next financial year, which is up by almost 100% compared to 2025. But the market has viewed that and gone, well, actually, fine, you're going to spend 135 yards on chips and data centers and whatever else, but you're making the money to pay for it. Not only now, but you're also guiding that you're going to continue making the money in order to pay for that.
You mentioned making the money to pay for it. I think this is potentially one of the issues, again, going back to Microsoft, because it was a huge move for such a huge company, let's be honest. When 45% of their orders, if you want, backlog is tied to OpenAI, which is one customer, which regardless of who that customer is, that's like nearly half your forward visibility is one customer, which is, concentration at the best of times, let alone OpenAI, which is iffy. And as a Jefferies analyst pointed out, can OpenAI pay the bill? So
Yeah.
I think, potentially is it, I say this, full disclaimer, when I saw that market had tanked nearly like 8-9%, I did have a cheeky little nibble. So I do hope it bounces, full disclaimer, etc. But no, it's an interesting one. And then obviously we've got, Tesla, Tesla, you can spend all day trying to analyze why Tesla's doing what it is.
Well, yeah. I mean, I think the most interesting thing with Tesla was actually nothing to do with the earnings. It's what Musk was saying on the conference call, which is that it feels like Tesla aren't going to be an auto company anymore. They're going to spend $20 billion this year to what they call streamline their electric vehicle lineup. But somehow what this basically involves is they're not going to make either the Model S or the Model X anymore. And instead, they're going to take all of that capacity in their factories to build, and I quote, Optimus humanoid robots. Now, I'm not exactly, a fan of all of this new technology or au fait with how all of this works, but that just strikes me as bizarre. We're going to sell people robots instead of cars. Maybe it will come off. I don't know.
So what I'm reading,
betting against Elon Musk probably isn't a great idea. But
so what I'm getting for that is you are much more of a fan of the analog sex robot.
Oh God! Well, what do you think was delivered?
Oh God! Oh God! I'm getting Cowboy. I'm getting mental images of Cowboy with the plant goals in the back.
I'll just have to turn the thermostat down so they don't blow up. Anyway, the other thing that is a joke in case my compliance people are listening. Please don't fire me. The other thing with Tesla is we've obviously talked a lot about the kind of circular nature of financing in the AI space. Well, Tesla have said that they are going to invest $2 billion into XAI, which is obviously the AI firm that Elon Musk owns. So, investors seemed to cheer that yesterday. Tesla was up about 4% after hours, but I think that one is going to take a while to shake out. There's a hell of a lot going on there. You've got the earnings, you've got the fact that the entire company seems to be changing, you've got the fact that they're taking funds from that company to put it into a private Musk venture. It's all a bit weird, if we're being completely honest with you. But as you said, the sort of cult of Tesla, you could probably use another word beginning with C for that one, but they're going to love it, whatever they do. And then as you alluded to earlier on, after the close, of course, we hear from Apple. The implied move on Apple stock is actually relatively low. Of course, they report at 9:30 this evening, London time, 4:30 on the east coast of the States. Options imply a move of about 3.5% in the stock after hours. But as always, it'll be Q1 for Apple. Their Q1 figure is absolutely pivotal because it covers that really key holiday spending season. It's when traditionally Apple make the bulk of their money, and also market participants will be looking closely at the China sales metric as well. Obviously, that's been a key focus for Apple over the years, so that will be in focus this evening too. And of course, Apple are, I believe, I haven't got the numbers in front of me, but I believe they're the second largest stock in both the S&P and the Nasdaq. So as we saw with those Microsoft earnings yesterday, it's not just the stocks in question that are liable to swing around on the reports, it's index futures as well, because the Microsoft earnings did drag both the S&P and Nasdaq futures quite considerably lower.
Tell you what, one thing I'll be looking at. Well, I say, that's a lie, Ryan. Don't lie to the listeners. I won't be.
You're going to be in the pub.
I'll be shit faced. I'll be shit faced by 6 p.m. Oh, 5. Let's be honest. 4 o'clock. Let's be honest. 3. No, one thing that I think other people should be looking out for is commentary on the Chinese market, because is it stabilizing? Is it still declining? Because there's a lot of stuff going on over there. That would be something that I'd be paying attention to if I were to be paying attention to anything. I think also worth shouting out, obviously, we've got Apple tonight. February the 4th, we've got Alphabet. February the 5th, we've got Amazon. Nvidia, the center, the hub of the circle jerk. Oh God, Ryan News said something very naughty then. I was kind of like, think of a bukkake party.
Oh God.
Nvidia is the receiver of the bukkake party. 25th of February, that one. There's a nice mental image for you. But yeah, keep it tight.
Well, I'm not sure how I can move on from that, but there are other things going on today. Clive saying, tell him to stop. Mate, you know how hard it is to control him. It's impossible. Bring back his carer. And that ain't me. In terms of today, we've already had a policy decision from the Riksbank this morning. They kept rates steady at 1.75%. They also indicated that rates are going to remain at their current level for some time, very much in keeping with their prior guidance. In terms of other notable things on the docket today, at 1:30 this afternoon, we will be getting the weekly US jobless claims stats. Initial claims seen pretty much unchanged at 205,000 in the week to the 24th of Jan. Continuing claims, they're also seeing pretty much unchanged at 1.855 million. That's for the week ending the 17th of January, and that, of course, coincides with the January non-farm payrolls survey week. Besides that, 3:00 this afternoon, we get factory orders data from the States, although that's from November, so it's far too stale to matter. We also have a 7-year note auction rounding out this week's Treasury supply, $44 billion worth being sold off at 6:00 this evening. And then overnight, it is time for Ryan's favourite economic data release. We will be getting the Tokyo CPI numbers out of Japan. That's expected. Oh God, that's expected at 1.7%, down from the prior 2%. And of course, it is worth bearing in mind because Japan and the yen and JGBs are very much being kept on the radar by all market participants at this point. But for the time being, that is all from me this morning.
Just one thing to end on, whilst we were talking earlier on, and that made me
Oh God.
about it and make it. Oh God, no, this is a valuable point in my opinion. Anyway,
Oh right,
it's very low. But we've been talking about the insane volumes that have been going through like so far this year. Very interesting to see how like the likes of CME, how their Q1 data is and how their forecast, because I reckon they'll be significantly above recent quarters.
Well, I think it was Monday, maybe Tuesday. CME had a record day for metals volume.
Well, and that gas as well. They've been having huge days in that gas in Sofra. Yeah, obviously
I don't think that's going to change anytime soon, is it?
Well, no, exactly. But what I mean is, it's the numbers are going to be very juicy compared to last year, in my opinion. But there we go. We'll see. Anyway, that's a long time. You've got months before we find out. But anyway, listeners, thank you so much for tuning in. Michael, pleasure as always. Clive, thank you. Tom in the behind the scenes, thank you. I'll buy him a beer in a bit later. Michael, are you out with us later on?
I'm not. No, I'm on nursing duties today for my old man. He's having his hip operation. So
sending me love.
I will.
Yeah, listeners.
I'm sure he'll appreciate that.
Of course he will. He's probably listening. Hello, Mr. Brown.
I fucking hope not.
Mr. Brown. Right. Before this descends into further chaos, Michael, thank you as always. Listeners, thank you as always. Whatever you're doing, keep it tight, stay safe, stay out of trouble.